Hey traders, what's going on? Jamie Setley here. It is August 8th, 2018, 8/8/2018, and we are in the dog days of summer trading, so to speak, as volatility and ranges, as you know, kind of talked about a little bit the last couple of days, and some of the swing updates are near historic lows, right? Showed that Euro chart last night, the 60-day range being what it is, that 60 days, 3 months, right? And it's in 2000, kind of 2014 areas, right? So that, of course, went on for a while, but once it did stop, we ended up having the largest, most fantastic, crazy trend. In that case, it was Euro lower that we'd seen in some time. So I don't know, obviously, or presume to know which way the trend's going to break. My thinking is that it's eventually going to be to dollar weakness, of course, given a lot of evidence and longer term levels, but we'll have to see what the setups give us. So that said, let's start with just a couple quick US dollar charts. Again, given how quiet everything has been of late, excuse me, you kind of already probably know where I'm going with this, but we are at 12,120. So the areas for kind of resistance that we had been thinking was going to be 12,115 to 12,125. We've been trading around this 12,125 area, basically for almost the last week, since last Thursday. So just about a week. And frankly, it's just wait and see here. I mean, we've got the 618 of the entire drop from the 2017 high and the upper parallel from that, right? If I were to just scroll out, you can see all that. 618 again right here, high from June of 2017 up here. So we've got a ton of important stuff up here. It is a little higher, right? So question is, are we going to get there, or are we going to roll over now, right? So again, I don't presume to know the answer to that. It's just wait and see. So if we get up here, you won't see failure. If we turn down from here for some reason now, we end up breaking this red line. I'm just using this kind of as my trigger line. The red lines are really the levels at which I'd want to be turning kind of or doing something, right? Looking for a top and trying to short strength up here, or looking for a breakdown to short weakness down here. Until one of those things happens, it really is simply wait and see, right? That simple. So that is my deal with USDOLLAR, okay? If we go to DXY, little bit different, but not really, in that we talked about maybe having a diagonal here or something. And if that was the case, we were going to poke out a new high and then turn over. But essentially, it is kind of the same in the sense that you're waiting to see if you can get a breakdown through this support line, this magenta line right here, okay? It's a 4-hour chart. Obviously, looks just like the opposite of Euro. The prospect of maybe a little head and shoulders top here. So if you were to break down below the 90, 94, 97 area, we'll look at Euro next. And if Euro, goes up through that 1630 area, we would have reason to basically just, be long Euro, targeting probably something like 1612, call it 80, probably 1710. So let's go there right now. Actually, let's go to Euro real quick. And just as a reminder, this is our long-term DXY chart. We started talking about resistance back in the end of May. It is now August, and we have been trading up around this level for almost 3 months now. I mean, that is pretty crazy stuff, right? It is just absolutely, market is locked into some sort of a jail or whatever. I don't know what's going to get out of it, or how it's going to get out of here. But once it gets out, we should have a pretty strong move, I would think. Again, either up or down. My guess is that we're going to roll over from here, but again, been looking for that to happen for a while. It hasn't happened, so if it's higher, we'll see if we can go with it. Although then you run the risk of a false break and kind of a really bad reward to risk environment. All right, let's move on though to Euro. All right, hourly chart. This is basically the chart from last night. We had kind of talked about two levels, 1635 or so. We ended up getting 29 last night, and then 1573, which we just came into this morning. So you could have kind of a 1-2 here, right? I know I'm getting really short term here, but I don't really think there's anything else to do because the ranges are so tight that you kind of have to. Otherwise, you would literally have nothing to look at this point. So again, going super short term, but you can see a nice 5-wave rally from the low, I guess was yesterday. And you can see that we've pulled back also in 5 waves. So again, there is this risk on a short-term basis, like as in probably the next day, maybe the rest of this day, maybe into tonight, something along those lines where you actually go for one more drop below here to make A, B, C, then you turn up to the upside, okay? So that's where my head's at on Euro. Now let's just say again, because this is so short term right here, and the shorter term the pattern, the more unreliable it is. So let's just say that thinking a bit ahead here, that if we were to trade up through this level, right? Let's say we trade up through the 1630 area. We're on an hourly chart here, so this is a 200-hour average. Let's say we trade up through that period or through that region. At that point, we would actually have a head and shoulders bottom, right here. And we'd be looking for something along the lines of 1680 would be the measured target. I would actually be looking more towards 1710 because that's the parallel, and we're just kind of looking to trade between these parallels as long as we're respecting them. So if we were to get up here, then we'll look to establish some longs with tight stops for a run up to the 1710 area, right? And all we're looking at here are these long-term parallels. These are the parallels that go all the way back to the highs, from February. So let's do a quick exercise here, and quick exercise, bear with me. All right. Oh, oops, I deleted what I did not want to do. Okay, hold on. I'm sorry, hold on for a second. Get rid of that. Get rid of that. Get rid of that. All right. So the parallels again are just based on this February, March trend line. And you can see here that if we throw one where the low is yesterday, it's still kind of, we're still trading on these. I mean, you have the low here, excuse me, the low here from July 19th, resistance here on 619 and support here. So, look, it gives you somewhat of a opinion, I guess, or reason to have an opinion that you might actually be making, some sort of a low here, right? It's not like I know it seems like we bottomed in the middle of nowhere. That's not really the case. You do have something there. You also have 116.40, which is actually the daily, the low daily close, okay, on euro, and that, that happens, at kind of sentiment extremes. So the market might not go to a new low, right? And it will hit just the closing level and then turn up. And that so far has happened here. So bottom line, you get above 1630. To me, I'd be looking to establish kind of a breakout position there and look at taking it higher to 1710 and then go from there. We could start talking more important breakout levels in euro if we were to get back or get through this, the 17 kind of 10 mark, right? Okay. How about pound? So I put out a pound chart this morning. Noted that we were not able to hold the 618 of the Jan low, Jan 2017, right? Remember, I'm drawing off of this. January 2017 low because it's, it's, to me, this is the low. Like this flash crash low, we've talked about this before over the last year plus, but there really was no kind of agreed upon price at which that was the low. So it's very difficult to kind of draw a fib there. I mean, I can pull up 3 different data feeds and they have 3 different prices. So I'm not exactly sure where you would draw the fib from down there. And, drawing fibs off of these super spikes oftentimes yields unfavorable results. So either way, we haven't held it. Okay, fine. What now? Well, look, if you can get down into over the next couple of days, maybe and test the 2770s, that would be a level to watch. As is always the case with cable, there tends to be a lot of kind of unforeseen newsy things that come out, like with the Brexit stuff. So I'm not sure it's really worth paying a ton of attention to it right now. It might be once we get down into this level, right? So, I've got myself kind of an alert set on this 2770s, and it's been quite a spot for the last couple of years. You have, even here, even right here, I forgot to mark it, but that was a big level too. That was in May of last year. So it was big resistance on the way up, pretty close to support after Brexit. Big support again on the way up, May of last year. And then, of course, it is the August low from last year. And, well, this is August. So maybe we go and hit the same level and maybe try to find ourselves a low just as we did last year in August. So that's all I am looking at when it comes to cable. Okay. If I go to a shorter term chart, with the British pound. And here's like a 240-minute chart. Yeah. Okay, so here's a 240. We do have the lower parallel here. You can see that. If we were to get an obvious, rather than trying to just pick the low here, but if we were to get, a nice clean 5 up or something, in cable, then sure, maybe we take a shot somewhere. But at this point, just either wait on that 2770 or wait for kind of a clean bottoming process. You can even look from the high over here, which was, I guess, yesterday, and you could make an argument for a 1, 2, 3. This is a little 4 rally, one more drop in 5, right? I'm going to see if we have any big volume stuff going on. So yeah, I mean, that's another thing. We didn't have any big volume levels this morning. A lot of times with a bigger low, if you're going to have a bigger low, you'd like to see maybe some capitulation. And we just don't have that at the moment. So all right, let's go to dollar yen, and then we will go to the commodity currencies. Dollar yen, I like this lower. And we got kind of a lot going on here in this chart, but I do like this lower, and I like it lower until probably, look, if you do 2 equal legs here, I thought this was interesting. You get 109.56, right? That actually intersects with the lower parallel of this fork and this sneaky little trend line over here, which goes off the May and high, and then the 613 high. And that little trend line right there was also support for kind of your last leg up into that high in July, right? So that's a great level to kind of target. If we look at where the intersection happens, it's actually not until kind of next week. So it's like a Sunday open or, early Monday trading type of thing where you get down into this region. So to kind of prepare for that possibility, I am looking at just this simple trend line here from the highs, okay? If we could maybe get back up into the 1140 area, it'd be great. If not, then we might have to kind of change tactics here. In fact, there is a high volume level. If I bring in my volume charts, this is a great thing about volume. You might get decent point of reference that a lot of people don't see. So that is so that's 7:31 at midnight, and that would be your high volume level. So what we can do is throw that in there, and that is right here, okay. And that's 11:04. All right. Okay, so I'm going to throw that on there with a red line. Okay, so essentially, if we start trading down, if we finish the day kind of down here, maybe a little weaker, maybe 1080, maybe closer to the lows, then I actually would consider a short with just at market with a stop above kind of 11, maybe 1125 or something. 1119 is that high up there. Just because at that point you'd actually be below the volume level. You could also try to leave a short on the volume level at 11, maybe 1102 or something, because it's 1104 is the level, and then quick stop out up here somewhere. So one of the good things about these volume levels is that they provide you with kind of points of reference that you might not see, or that everyone else might not see, or might not have the ability to see, for one, but might not be able to see them, and kind of will see breakdowns and breakouts through those levels that kind of seem like a surprise. So kind of hidden, if you will. So I like this lower. Unfortunately, you know, with yesterday, I mean, I thought this thing was well on its way. You know, we got down sub 111 by whatever, 1 or 2 pips or something yesterday. Of course, U.S. market opens, and what happens? It's just like, okay, let's take it higher, right? It's becoming kind of a joke at this point, in that, you know, the U.S. market literally, it does not matter, it seems, what happens overnight at all. I mean, tale of two markets. It's just literally the U.S. that it's crazy. I'm kind of at a loss for words, as you can tell. Um, it was like this a couple of years ago, of course, and then you had the flash crash in 2015 and all that stuff. It'll probably happen again, but whatever. What can you do? So let's just wait for it to end. Anyway, my rant. Sorry about that. Looking for dollar yen down to 109.50s. Could say you got a minor support level down here, right? 110.60 is just the low. You've got parallel, but yeah, looking lower. Okay, so there's dollar yen. Commodity currencies. Let's go to Aussie. Aussie first. Aussie volume level, by the way, if we can get up through here, you might have yourself something to work with in terms of a long. This is just a clean triangle, right? And let's just go and remind ourselves, I guess, of the longer term picture. So we've been sitting on this support since, again, June. Okay, we were there as early as May, and we've been sitting on it 1, 2, 3, 4, 5, 6, 7, 8 weeks, right? So 8 weeks with this hideous candles. And again, it is also the 618 of the rally from 2016 to early this year, 2018. So it's a big spot. Now, I took a short the other day, last week, because, well, I wrote about it, but I couldn't completely ignore the fact that, look, if we wanted to break down through 73.70, then to me that gave enough evidence to attempt, a breakdown for the Australian dollar and maybe, catch one last move. But I'm not going to force it any, multiple times in a row. Didn't work out, so next chart, move on. Thank you. And at this point, this February to March trend line right here, right? That is up in line with the high from July, which is 74.85. Okay, that to me is your breakout level / decision point. So if you can draw a little triangle dilly here, that's 74.48, right? Little triangle line. But the real test again is going to be up here. So if you can get up through this region, then to me you've got reason for a long position, probably targeting on this. 76.85 is actually going to be your measured objective on that. Don't have anything there for in terms of, say, slope or whatever, but the 200-day average is not far from there now at 76.50. So given how tight this range is, you get a quick breakout above here, and you could have a quick couple hundred points on the upside. All right, it's all about being flexible with these ranges and kind of allowing them to break or do what they're going to do, and then kind of go with it at that point. So, maybe hopefully close to something happening with the Australian dollar. But yeah, the level to know, 74.85 is your decision point, your test point, etc., etc. Okay. Now, say within this range, I would say that you've got maybe support around 73. That close there is 73.96. Okay. Pretty close to the weekly open at 74 flat too. So again, not far. All right. Let's go to Kiwi. So just showed you a long-term Aussie, and we want to look at a long-term Kiwi as well. So long-term Kiwi, this is from some time ago, probably sometime in June, where if we were going to start breaking down, the big level to get to for Kiwi was going to be this, 65, maybe 20, 65, 40 region. That is the August, excuse me, that is the 786 of the rally from 2015. You can see that we are on the 618. We've been on the 618 again since June, okay? So you're really kind of in the middle of nowhere here. The Aussie chart's actually a little bit better, I think, than this chart, but what to do here, right? Well, A, B, if, let's actually go to the other, you can see the waves a little clearer on here and the levels. Okay, so if you can get maybe, what is this? Maybe an A, B, if you get one more little poke down here, C, you might have kind of a 1, 2, all right? But look at these parallels that are holding out, that are holding so well. So again, we had a chart of these back last week, and you've got the the Fed March levels here. Okay, median line has kind of been support the last couple of days. If we go one more time below it, fine. I'd be looking for a reversal at that point. But I'd say your first sign of possible, of maybe a constructive action would be above here, right? So the magenta parallel, which, looking back, just a ton of reactions on this. I mean, this is back in March, okay? You can see the breakdown and the resistance here in April, moving along. Obviously resistance in July several times, okay? Some breaks above it, which were short-lived, but then resistance, excuse me, again, just this morning, in fact. So if we were to get back above there, I would be, entertaining along at that point. I have to look and see where the volume levels are and everything. But again, we're going so short term here because the ranges are so tight, and we're kind of seeing where, where things change in the near term, like the very near term, because in order for things to change in the longer term, or the, more of a swing basis, they have to change in the short term first, right? It's a progression. So that's where my head's at with Kiwi, right? Let's see if we can get through the 6760s. If we do, there might be something to do. If not, no big deal. We move on, right? In terms of news, I think, what do we got here today? We do. So we've got RB and Z today. I will send out on Twitter the Prattle RB and Z analysis later. But that seems to be the only big mover, I guess, for New Zealand dollar going into the rest of this week. All right, dollar CAD now. And then we should probably look at crude, because I just looked at my screen and it says it's down 3.5% almost. course, the NASDAQ and the S&P are up after they were down overnight, but that's just par for the course, as they say. All right. So we came into the week thinking, not just this week, but the last, I say 2 weeks, I guess, after we took that short over here, we got stopped out over here on trailed out, but we were looking for the 2920, 2940 region. Yes, I do know that it's 2 legs down at 2970 or 63 actually, which essentially was the low yesterday. But hey, you've got to pick your method, I guess, and kind of stick with it a little bit. So I am looking at buying this dip just as we did yesterday. I know we had an order in at 30.10, so that order is probably going to be moved up a little bit going into tomorrow. Thursday, not a ton going on in Canada land, at least on the calendar, but you do have a bunch of stuff coming on Friday, including their employment, right? So you had U.S. employment last Friday, and this is one where you're going to have their employment the week after. Okay, so if we go 60-minute chart, that's actually, we'll just keep it on this one. So here's a 4-hour chart, okay? And you can see that if we draw, so I had the, in last night's post, the swing post, I had it drawn like this. And then this morning, I said, if you draw like this, right, use that high instead. It's much cleaner, isn't it? Much cleaner. So this gives you some great levels to trade on. I mean, look at how beautiful that resistance was there, okay? Obviously, also, you're, kind of brushing up on these, or trading up on these supports on the lower parallel from 731 through, I guess, 87 through yesterday. So again, we draw this fib. You've got 3022 is going to be your 618. You've got these lows over here at 3025. So probably going to have the order moved up about 15 pips, and we will be looking for, I'm not going to be looking for a ton probably. I'll probably just be looking for something like 3130 to 3150. Although I will say there, I guess there's an outside chance if we go to here, let's go to the daily, you might see a little better. I guess there's an outside chance that you could get up here at some point. But again, I don't think this is the market, especially when you're trading within the ranges, to try and go for extended targets. Let's put it that way. But that would be your 618 as well if the whole moved down at 32.24, which is right there. So maybe it's one where we can get two kind of. I'm sorry. Hold on for a second. Sorry, my 4-year-old son was just asking me who I was talking to, and because his mommy is not here right now. So anyway, I told him I'm talking to friends. But we have here 32.20 would be a kind of a target, potentially to extended target with NFP, or not NFP, but Canadian employment coming up. But again, I'd probably just be looking to take 31.30, which is the volume level and weekly reversal resistance. You can see if you go to a weekly chart, you'll see this was the Friday close on that, and that would be where you'd be looking at. So, we're just trying to trade. We got to use the short-term tactics here to try to make some pips, right, and not try to go for the big move, because there just aren't big moves to be had at this point, not until we get some breaks of these ranges. Okay. So there's the deal with CAD. Frankly, CAD, the Canadian dollar levels are, might be the cleanest on a very short-term basis, right? I mean, those are really good levels. The 30.25 level is super clean. I think you get away with a stop under say 30 under 29.90, frankly, right? I don't think you should be getting back below the month open if indeed we are headed for something up here. All right, let's go to crude oil. As I just noted, crude was taking quite the dive, down 3.5%, and we are getting close to the level that I thought we were going to reach like a month ago. And that is this February, June trend line. So that's going to be 66, kind of on the nose. What is that on USO? 1388, 1360 or so. Okay, if that doesn't hold, then you might actually finally get your test of the 200-day average at 64. Okay, so we know what we're looking for in terms of, nope, there's the Jan high. We know what we're looking for in terms of crude. We're looking for a hold on one of these levels after this breakdown, probably something around, what did I say, 66 was that trend line from Feb? Yeah. So that's the test. That's the decision point, we'll say. And if you get below there, I mean, it's kind of like look out below, because let's not forget we are coming from a very big spot. See, there's my alert. Just hit it. There it is. Alert, US oil. Just hit the January high. Here's another thing too to be aware of. If I bring in the seasonal charts, crude oil seasonal tendencies for bottoms really kind of over the next couple of weeks. So 5-year bottoms this week, and 10 and 15-year seasonal tendencies bottom the week after that, and then you tend to get a bounce of sorts. So coming into the big spot, that February March trend line, that's what it's all about. You get a hold there, look for a bounce, you break it, and it's probably out for the count for a while. But all right, how about some indices? Why not? $240-minute chart, channel on the S&P. We're going just off these lows from April and May, and you can see we've had other markets like copper absolutely get destroyed, since topping. Crude oil has come off pretty good. Now the S&P 500, it's just melt up. So look, if we get up into a new high, all right, which at this point is not very far away, it's like 20 points away, but if we get up into that level, you're looking at also this channel. So this is the short-term channel, okay? I really don't have anything else to say on the indices at this point. I mean, it's kind of hard to analyze or give, kind of suggestions on levels when, I mean, frankly, it's just kind of the same. It's the same thing over and over. I mean, we started coming off here after I thought we had kind of a 5 up, and remember we were looking for 2740. I mean, that would have been just a beauty, right? 2740, and looking for that, and then maybe for support. Was not to be. We had that day where we wake up right here, U.S. Open, and it's just straight up from there, like no news or anything. It's it kind of, to me, middle of nowhere. I mean, I guess you did hit these horizontal levels here, but it was kind of drastic. So I'm not going to comment too much on the indices. I just don't have much to say about them. There's just not much to say, right? I can sit here and try to count waves all day, but if they're not, it's not doing anything other than just melting up, 10 points a day or being flat. What else is there to say, or what is there to say? Not a whole lot. So that's the deal with the S&P. I'd look at, just follow that channel. As far as the Dow is concerned, these are longer term parallels, but kind of be looking at this level here, which is really pretty close to that level from February, that high, excuse me, from February, up at about 25,830. So it's lagging today. I still think the interesting or more important markets to follow are kind of like your, China, obviously. You can see the Shanghai trend line from 2013 is down here. Remember the FXI chart from last week? Let's, don't forget about that. If we can get at some point a move to 4070, I mean, that would be a dream in order to, maybe take a, a long position in here, and maybe, if you're going to get a big support down here for in China, then likely that's probably when you get a top in the dollar. Okay, unlikely that you're going to have China rallying. It's been falling ever since the dollar bottomed. Okay, it's almost the same chart if I flip it over. So, I'm looking at some of these charts, and these are telling me that these are the very important ones to watch as we move forward. Okay, that's all I've got in my book today here, as far as what to look at, or what I am looking at, I should say. What are there questions? Ty says, are you looking for a DXY top? I'm not really looking per se for anything right here. Basically, if we drop below 94.97, I'm looking lower until about 94.30, right? If we go higher, then I'd look for a top starting around 96. Okay, that's going to be more euro based, right? So I think it's better to look at this chart, which is US dollar, the one that has the FXCM dollar index. And with this one, it's pretty clear. Like if we go higher, I'm looking for a top at 1220 or 12,200 to 12,220. If we drop below 12,070, but simply this trend line right here, okay, then I will take that as a bearish signal. All right, so that's where I'm at with dollars. So I guess you could say that I'm looking for evidence that a bigger turn lower is underway in the dollar, or that whatever wedge-like action we've been in here has been broken. It also depends on, I guess, the currency you're trading against the dollar. So, like I said, there's bullish setup in dollar CAD, right? Falls a little bit more, and we should probably be buying it. or we will be buying it. I'll have an order to buy it. You know, Aussie and Kiwi are up in the air, obviously, at this point, but we know where the decision points are. Just went through that. Euro, if we get over the high 1630 from this morning, then you've got, you know, potential to be bullish till 1710 and then kind of, you know, reassess. Cable, looking for the low. In dollar yen, we're looking lower, probably again until 109.50s or so. Any other questions before I wrap it up here? A little shorter time on this webinar, but that's also a function of not having, you know, a ton of stuff to really go through here, right? I mean, I could show you charts about how small the ranges are all day long, but what fun is that? Anything else? Any other questions? Feel free. Okay, going once, going twice, and Dunzo for now. All right, so thank you all for your time as always, and um, we'll have a post out later, and hopefully the markets will break out of these ranges and we will get some moves. All right, okay. Take care, everybody. I will talk to you later. All right, bye.